why have you joined the dark side? Why have you decided to let the barbarians in?
Everyone thought that, fintechs were going to completely disrupt the banks and so forth.
Few banks are fundamentally, a very big part of how the world and society work.
What is being built is not about speculative trading and purely around price movement. It is about financial infrastructure.
The annual stablecoin volume has reached 33 trillion, surpassing that of like Visa and MasterCard combined.
We will never kick anyone out of a meeting if they mention the term stablecoin and digital asset. In fact, we'll embrace that conversation.
Congratulations, Standard Chartered Bank. In Hong Kong, you are now allowed to issue a Hong Kong-pegged stablecoin.
So whether that be, allowing our corporate customers access to stablecoin, our private bank customers access to potentially, trade in digital assets like Bitcoin or Ethereum, this is like a clean slate or a blank opportunity to, build the best in class using the stablecoin infrastructure as that foundation.
Because ultimately, banks are not going away. Welcome to Season 2 of the StraitsX podcast, Stable Money at Scale. Stablecoin may have started outside the banking system, but the next phase is being built within it. Today, we are joined by Luke Boland, Global Head of Fintech and Client Coverage at Standard Chartered Bank, to talk about what changed and how institutional demand is driving the evolution from stablecoin to tokenized deposit. But before we start, Luke and I checked actually our WhatsApp messages. I think we had known each other for about 3 years plus, but it feels like a decade to me. There's so much thing that has went on in the last few years itself. And I think on my collection is...
You've become a father again, and since that time, right? There's many goals instead of the...
Yes, if you consider like start up my first kid, then my actual son just gone.
Yes,
started again. But yes, I still remember the days that, we are chasing you down, like, hey, look, I need to make Luke. I heard a lot of things that Standard Chartered is doing with Fintech, that is doing about blockchain and stuff, and it has been a taboo in the early days, right? And you guys are pioneering that space. And that's why I think today we would love to have you share, why have you joined the dark side, Luke? I look at your profile and just really put it up. You have been in banks all your life and, you're still working at a bank right now. Why have you decided to let the barbarians in, right? Why have you decided to let us, the barbarian at the gate to enter Standard Chartered Bank? Love to hear your take on this.
Well, first, I think that thank you so much for having me, Tianwei. I think as you said, it's been, it's been great, particularly over the last year. You and I just came out of a meeting together. We're talking some pretty exciting things. Look, I wouldn't classify you as a barbarian. I think you're a very gentle soul, and as an industry as well. So look, why have I entered into? Yes, it did feel like when I started doing this, even within Standard Chartered, perhaps sort of 4 years ago, we were a bit of an outlier. So I can tell you, yes, in the last coming on nearly close to 12 months, is that period of around, the stablecoin summer, as those people still refer to it, perhaps. That sort of feeling around the business has changed within Standard Chartered, and I think from an industry as well. I think obviously there are different elements of that. Look, early on, our business has we cover and support our digital asset clients alongside our fintech or paytech type clients, and I guess that's a similar thing, right? Everyone thought that fintechs were going to completely disrupt the banks and so forth. And I don't think we have seen them keep the banks honest, and we have seen banks in certain segments, maybe towards more the consumer end or the SME end. There has definitely been some disruption, but obviously, with firms such as yourselves, at the corporate and institutional end, I think it becomes more of a partnership where, yes, you are driving, technology change to the banking infrastructure, and we are keeping up. In a way, right? And I always say at the moment, we still do boring things for interesting people. You are the interesting people rather than a barbarian. And at the moment, we've been doing, as we've talked about, fiat-related services. I think that's the bit that's going to change, right? And that's the bit that, working together with firms like yourselves that are willing to adopt, maybe early projects or early solutions that the bank bring into blockchain, is the bit that's going to change. So, we're ready to to partner, bank, and support as many firms in the digital asset ecosystem. We can't do that for everyone. And we only have a limited amount of people as well, which I think was more of a time. It was never personal made. It was also just a timeline of when we had more people on deck that does understand that's this segment. And I think that's also a changing, right? I think you're getting in banks more people that understand digital assets, as well as in digital asset firms. You're getting more people that you would almost classify that come more from a TradFi world. So I think it's a number of these things that are coming together with the people that are involved in the segment, obviously regulation, and obviously that view that, what is being built is not about speculative trading and purely around price movement. It is about financial infrastructure. And that's a bit what I'm looking forward to. And I'm trying to drive one that you may be involved in, one that others might be involved in, things that we need to build as a bank to provide that infrastructure. So whether that be, allowing our corporate customers access to stablecoin, our private bank customers access to potentially, trading in digital assets like Bitcoin or Ethereum. Those are the things that I'm excited about. So I was very happy to open the gates and let the barbarians in, as you say.
No. That was definitely a joke right there. Because let's say, even at StraitsX, I think from the very beginning, we are a payment company at heart. And when we first introduced you guys, we have been in payment space for almost 10 years now. And fundamentally, I have advocated this many, many times that I feel banks are fundamentally, a very big part of how the world and society work. They are major trust anchor. I've joked about this a lot. My parents, elderly parents have no idea what I do, but they trust Standard Chartered Bank, they trust the traditional bank that it worked with the last 50 years of their lifetime. And I don't see that changing, right? Not everyone will just fully understand the technology, will jump straight in. They need to have trust angle that they have to continue working with. But I think you're basically right. I think a lot of us, feels like the last 3 to 4 years has been like 10 to us, right? A lot of things have happened. But I like the word you put out there, the stablecoin summer. Like this has been a breakaway category that have seen mainstream adoption, right? Because beside the speculative nature of it, we start to see the application side. And some numbers that we have seen, like 2016, the annual stablecoin volume have reached 33 trillion, surpassing that of like Visa and MasterCard combined, which is like 25 trillion, right? And we are seeing that stablecoin activities have and volume has reached about also 400 billion from just 2025 itself. So that have actually more than doubled versus 2024. So these are the kind of activities that we are seeing heavily right now across, specifically in Asia Pacific, where we are all both at right now, where the heart of this is actually already happening. So if you look at where StraitsX has benefited from this growth itself, our XSGD and our XUSD, our Singapore dollars regulated stablecoin, and US dollars pack one, have now been approaching on-chain transaction. We just crossed the 30 billion mark for cumulative on-chain transaction itself. And that's where we've been partnering very strongly with Standard Chartered Bank, which I can share a bit more about later on. But where I'm actually curious to see is about what Standard Chartered has been a pioneer in this space. I would say that you guys are probably one of the earliest banks that embrace this, potentially because of you and your push from the team itself. I see that as being an epicenter for a lot of the things around, I would call the legitimate real-world use cases institution. Because ultimately, as I mentioned earlier on, banks are not going away. And even some of the projects that we are doing together, you will realize that banks are still a centerpiece for how money are being custodized and being transacted at. Because as much as we would love to do everything on the blockchain, there are needs to have some time, go through fiat, and then that itself is usually settled between large institutional, and having them all bank at the same place, ideally with a bank like Standard Chartered, is what we start to observe a lot of network effect here, right? So we'd love to hear what your take here is about, the interest of how Standard Chartered is positioning itself, and also how your growing client interest is driving and steering some of that conversation for yourself.
Yeah, no, I think that's really a really good point about having that real world adoption and the payments landscape, which changed things. And I can go through some of the things that we as a bank have seen more recently, how we've seen it through our work with Zodia Markets, and even some of the projects that we were involved in before. But first, definitely congratulate you on the growth of XSGD and XUSD. Like, that is a huge compliment, right? To be, very regulatorily led. What is it, the joke? You have more DPT licenses in Singapore than anyone. That's a huge. No, it's serious. It's a huge thing.
It's not a good thing
to achieve.
Yes.
Look, it's a huge thing to achieve to approach it in that manner. I think as a bank, we are also somewhat fortunate, right? So, obviously our network through Asia and Middle East, the markets or epicenters where we're seeing a lot of this adoption and growth. Being here in Singapore, MAS has a very good, strong regulatory framework around digital assets and digital payment tokens. Perhaps before many others. And obviously that's even grown in Hong Kong. We've been involved and to a dispute in the UAE as well, across the different regulators there and the central bank. So that's one of the reasons Standchart has had maybe a slight advantage against some of our competitors being so active in those locations. And that's kind of where, I guess, the incubation of different things occurred. So, look, I think it was even earlier than that, in 2018, 2019, we were doing activity on the blockchain in terms of remittance for Alipay Hong Kong into Philippines. Now, look, perhaps back then, that was a project that was, almost falls into that category. I would say if you don't have to do it on the blockchain, then don't do it on the blockchain if it's not necessarily. But it was a project that really got us thinking as a bank around, what are the parts of liquidity that's needed? What are the options there? And that network of MTOs in terms of setting it out. Now, look, fast forward from there, obviously we've been very much in the space of banking, of fintechs, banking of digital asset firms across exchanges, stablecoin issuers and custody providers. And that's obviously further enhanced us being in that ecosystem. The bank also, as I said, launched Zodia Markets, which, pivoted into very much being stablecoin led. And that further gave us insight around, what are the use cases or real use cases that are seeing across the globe.
So maybe just for folks that actually don't really know this, but I think it has been well advertised, unless you're living on the stone, how StraitsX and Standard Chartered has been working together. Like, we can joke about the fact that we are the barbarians, but the fact we really appreciate the partnership that we have with Standard Chartered over the last few years. And Standard Chartered right now is the reserve bank holding on to the stablecoin reserve for StraitsX itself. What that means itself is that under the new upcoming regulation of a well-regulated stablecoin regime, StraitsX Reserve, which is backing the XSGD and XUSD, our one-to-one back fiat-based stablecoin itself, the underlying reserve is sitting with Standard Chartered in the segregated clients of funds as bankruptcy remote. And more importantly, beyond that is our rails, our banking rails for on-ramping and off-ramping is heavily depending on the Standard Chartered rails itself, which give us the ability to connect to the traditional fiat world itself. Right. So that actually is one of the fundamental building blocks that I feel that allow us to be beyond just a stablecoin issuer. Because but a lot of folks that know us from StraitsX days itself is we're actually not a stablecoin company alone. We are more importantly a payment infrastructure company, which we have been operating in the market for the last 10 years. And for us, a big part about this is actually a tagline for the company is stablecoin rails for real world usage. It's about real world usage of the stablecoin. And this is the part that I feel, around the world, Asia is really leading the pack, right? We got all very excited about Genius X passing last year. And it seems like forever now. Everybody's been talking about it. It seems like years ago to me, but seriously, it's just been last year. But in this part of the world that we are all both based in, Singapore itself, Asia Pacific has been leading the regulation frontier, right? So Singapore itself, we have been in early compliance with the upcoming regime, and MAS has really released a framework more than 2 years ago about how they expect regulated stablecoin issuer like us to segregate our funds, have the right structure and audit to make sure that we are always one-to-one back itself. And if you look at the fast forward right now, there's congratulations Standard Chartered Bank in Hong Kong itself. Standard Chartered has also been receiving the Hong Kong MA ordinance that you are now allowed to issue, at least from a sandbox regime perspective, a Hong Kong packed stablecoin itself.
Yeah, look,
I would love to hear a take about real world use cases, which I think we are leading the frontier, right? To just plug a little bit, we have been working together for the last 2 years around real world usage, and one of the marquee projects we launched together with Standard Chartered right out last year is the fact that travelers today coming in from using Alipay Plus e-wallets are able to scan and pay at any Grab QR code merchants in Singapore itself. And when they do that behind the scene, at the transactional level, every single transaction is using XSGD or XUSD on the Avalanche blockchain. And to the end user, however, to both the merchant and the end user, this is a seamless project. This is Alipay to them, or this is GrabPay to them. They are actually obfuscated from the end experience of technology and the mumbo jumbo of blockchain. To them, this is just Alipay and GrabPay, which is, in our opinion, from our company's perspective, that's how mainstream adoption will happen. We were just talking about it the other day, right? All the application and the scale that we talk about, like we see now $30 billion of transaction on chain over a very short period of time for us. All the massive adoption that we are seeing are always the kind of transaction experience that the end users do not have to change their user behavior. Like the QR code scan and pay is a very good example. But I said, recently, the last 18 months, and probably we talk about that also as well, the fastest growing part for us is a stablecoin-backed Visa or MasterCard card that we are also a Visa principal member issuing out of Singapore itself. That kind of use cases have like 40-fold for us in the last 12 months in terms of transaction, and maybe 80-fold for us in terms of number of card issue that is backed by stablecoin. So these are the adoption curve that we are seeing in production and in the everyday life. But this is where I also be excited to understand, with now you guys, Hong Kong stablecoin coming out for you guys, and how Standard Chartered actually is the epicenter. You're sitting on a lot of this kind of fiat to the Web3 flow, because you guys have banked some of the largest Web3 players, from Coinbase to Circle itself, to us, that allow all this interoperability to happen behind the scene on the banking rails itself. Where do you think is the most urgent demand now coming from your clients beyond the standard? I want to be able to mint and redeem stablecoin.
Yeah, so I think you're completely right, and you've pretty much outlined, and what is always fantastic about StraitsX and experts from the outset, right, from when you started, is that payment part, and you have sort of taken each part of where we're seeing that stablecoin adoption. So yes, in the pre-funding or the ease of pre-funding for cards, and particularly from a Visa issued card that you support, as well as in that back-end infrastructure from a stablecoin perspective. Look, I think that is exactly it. Why there's a lot of noise and conversation about stablecoins, many people may already be involved in a stablecoin flow or activity and be not aware of it. You could be a receiver of a remittance from the US into somewhere like the Philippines, and the actual leg of the fiat delivery will come into someone's wallet or bank account, but may have started off with that in between. I'm not going to use the term stablecoin sandwich. Leg has occurred, right? So look, I think that's exactly it. Early on, we spoke to a lot of fintechs that were looking for adoption of using stablecoins, and a lot of it was sort of moving large sums of liquidity from one location to another. And as each year goes on, each month, we're seeing maturity or more conversations around the different use cases. There's stories around, obviously, within our team in 30 markets that have been very successful in working with commodity traders and shipping in that aspect. And so we continue to see the different real world adoption from stablecoin. But you're right, at this point, it's a back end infrastructure. Now, what will further enhance that, and is what we've been doing, is around, I talk about making fiat move as fast as the blockchain. So as you said, whether that's creating an ecosystem of clients, whether that's, us have payment rails that are becoming more 24/7 or expectations that's growing. Because that's the thing, in some aspects, people don't wake up in the morning and say, I want to use the stablecoin and want to solve a problem about moving, liquidity, whether that be 24/7, whether that be, as the fastest manner in which to deliver that end fiat or value, or whether that be, as we're seeing, finding ways of bringing the cost down and leveraging liquidity in different locations to make that happen. So I think the use cases are only going to increase. I think pure payment use cases, sort of individual, that sort of thing, I think we may start to see not so much a slowdown in that adoption, but I think the speed of adoption into some, say, more capital market FX, more sort of security settlements using stablecoin will grow exponentially, that it will look like that's slowing down. And that's just because I think the complications around payments is so much more than, many of us or some of us do know, and therefore we can see why in the security section or market segment around settlements, stablecoins will really provide that offering for liquidity, for 24/7 settlement. That will, I think, as banks build out capability, will come more and more. Yes, look, I'd love to be able to offer all of my clients, whether they be fintech or corporate, access to stablecoin, ability to make payments with stablecoin, but it's a journey. And it's a journey that us as a bank have started, whether that be with our digital asset custody platform that we've launched in the UAE, and this year we should see in Hong Kong and Singapore. We can custody stables today. That's certainly a conversation you and I should start having around, adding yours to our custody platform. The next is access, right? And that's the next thing. How do we give our clients access to stablecoins for the uses that they're looking for? And whether that be for a corporate client or a fintech client, in terms of them giving it to their underlying clients, there's many standards and industry requirements that we all need to go through to be able to make that work. That's similar from a payments landscape that is available today. But the beauty of it, I think, with the technology that's available and possible, some of it is, if you look at all the things that are broken in the fiat landscape, and particularly for a bank around transaction monitoring, sanctions screening, measurement of liquidity, this is it's like a clean slate or a blank opportunity to build the best in class using the stablecoin infrastructure as that foundation.
No, definitely. I want to second that. Like I said, we have been one of the pioneers in some sense, and maybe not by design, but just how things were. We were one of the earliest issuers of non-US dollar stablecoin in the world, actually. XSGD itself have been more than 5 years. And I was just sharing itself, out of the 30 billion on-chain transaction, about 10 billion come from XSGD related transaction on-chain. And we can still see that numbers growing every single day. Would love your take now that, Standard Chartered Bank is right out of the oven. Been selected to issue Hong Kong dollar stablecoin. What is your thought about non-US dollar stablecoin and their use cases itself? Love to give my take, but I would love to hear it from you now that.
Yeah, absolutely. Look, there's been a lot of talk, from starting around things like on-chain effects and how the need for non-dollar stablecoins is to drive that adoption and what are the benefits there. I mean, for me, look, I think while getting access to dollars and all the elements that have come for that and the benefit of that for US dollar stablecoins, whether it be in emerging markets with hyperinflation, whether it be 24/7 settlement, that's great and that has true benefit. But the next phase of that is if you, as we said, to make the payments aspect grow even further, that ability to convert into a local stablecoin, whether that be a direct conversion from a US dollar stablecoin into a Sing dollar, into a Hong Kong dollar, which is our anchor point team in Hong Kong. That will be the next phase that will allow that, because while it's great to have 24/7 access to US dollars, in some places you won't be able to spend or use that for what you may need, for paying bills, paying to a merchant, and that from a consumer standpoint will drive that. I think also as the activity that you've done in linking local QR payments from Alipay to Grab for merchant, having that non-dollar stable coin, which as you said, to the pioneers from XSGD, and we should definitely connect in with our Hong Kong dollar stable coin. I think that really is the next phase to keep that outside. What we'll see is a lot of institutional adoption, as I talked about with US dollars. The benefit that US dollar stablecoins have bought for different reasons, but the next phase around local currency will change that even further.
Yeah, absolutely. And like I said, we talk about this a lot of time. Maybe just really two main points of how we are seeing non-US dollar stablecoin are being used right now is more about solving two fundamental problems, right? First is, of course, the liquidity part you mentioned, which is the same problem with US dollars. If you're using SWIFT, you're unable to move funds fast enough. It doesn't work at the 24/7 internet speed that we all wanted. But I think the FX is where you nailed it, where we are seeing the most opportunity on, right? The FX fluctuation and not able to have FX finality at transactional level is the biggest problem in terms of cross-border payment that we facilitate, right? For the Grab, Ali Scan and Pay use cases is a very good example that we advocate a lot of time, that we've been acquiring on ground for the last 10 years. And you'll realize that when you scan your EDC, you tap your card or you scan a QR code, the experience is real time to you, but the settlement delay is normal, right? Anything that from 3 to 7 days. But that actually affects FX rate, right? Because FX fluctuate real time. And the way that we solve it in the traditional ways, of course, we go back to our friends at Standard Chartered to get a hedge, to basically hedge that fluctuation, which has been the old way that solved this for the last 50 years. I just think that right now, because with everything being on-chain and a stablecoin transaction on-chain is both a communication and a settlement, it solves this problem of both liquidity and FX fluctuation finality immediately. Right? And that is what we're seeing game changer usage, where we're starting to see benefits from cross-border scan and pay, and now back to the Visa card tap and pay that we are seeing also at an adoption scale. But we'll be excited to see what we can do together with Hong Kong Stablecoin, right? So look forward to work with the Anchor team. So with that, I mean, maybe, yes.
Yeah, so I mean, not just obviously for Hong Kong dollar. I mean, we're working with in the sandbox in Malaysia with Capital A and Bank Negara and and many other places. Obviously, the governments, particularly and regulators, are looking to ensure that there are alternatives to US dollar stablecoins. Right, the big thing from a capital standpoint that they want to ensure the sovereignty of currency. Right, so we think that will play a part of it as well. You're right. One of the things around what you just said, right? Previously you would come to us, for hedging with these type of things. As a bank, we need to evolve into this new world of on-chain and then look to develop services that will support that. Look, whether it's protection against, where we may lose on the other side, but I think the upside is much greater with the benefit that we could bring to clients using more on-chain activity.
Thank you. Maybe look, now this the session that a lot of the audience love the most, right? Which is the rapid fire. I'm going to just ask you some random questions, come up with something that you can think of your mind. Maybe the first off is that, you've been in this space, in this rabbit hole with us for the last 5 to 6 years. What is something that you think still cracks you up when people bring it up to you about this whole thing that you're doing? Like, be it, for example, like we are the barbarians at the gate. We got that out of the door. Any other funny things that you have been hearing these days that you still think that, we are quite a bit early in this, or some folks that this is no longer something that is just, some degen folks that do?
No, look, I think it's funny, right? So yes, I've definitely seen the change in the industry. I think there are many almost retired bankers that have gone into the space and are seeing that in the number of the firms that we work with. I think I always say I never will never kick a client out of a meeting if they mention the word stablecoin, but I've heard of banks that have done that before. But it is a change. Like there is a lot of things that are changing in the market. But I will refrain from naming names. But yes, we will never kick anyone out of a meeting if they mention the term stablecoin and digital asset. In fact, we'll embrace that conversation.
Oh, I think just that alone, we came a very long way. It's used to be such a taboo word that we had to think about how to frame it to our banking partners without freaking out anyone over there. So right now, we at least can have a meeting and just talk about call a spade, right? This is exactly what we're doing. That is definitely a huge improvement already.
Absolutely.
Yeah. Awesome. So thanks for that. So maybe I'll bring it back to full circle, right? So stable money at scale isn't something that to watch, but something that we want to build together. But Luke, thank you so much for coming today to join us at this session. Any statements or punchline that you want to let your fellow bankers, right, that, are convinced now that you're not letting the barbarians you have not joined the dark side, you represent the banks. I think there's a lot of bankers that would love to learn from Standard Chartered or what else we can do. We just had a meeting this morning that they mentioned that you guys did a lot more than others without mentioning our partners. But I think they will love to hear what you think about this space and how to get them more involved. How did you get started?
Yeah, absolutely. Tianwei, thank you again so much for having me. It's been great to chat as we often do. Look, I say this. Look, I think from an industry perspective, it's changing so rapidly. Not only from the technology, from the regulations, from everyone's understanding. I think it's pretty much clear that you can't work in banking or fintech, whether it be payments, without having an understanding of this space, having a strategy within the adoption of whether it be stable coins, whether it be tokenization. And look, I'm just really excited that, as a bank, Standard Chartered, very much supported from the early days, very much supported from the top. both looking at how we enter the ecosystem from a banking relationship standpoint, which is obviously how we've got to know each other, but then how we can partner with those clients and others in the ecosystem to build the next stage of financial infrastructure. Because there'll be elements that, yes, we as a bank may build. There'll be elements that we may build together and partner to be able to deliver the future of finance. And that's a bit I'm excited for. And hopefully it will be, it may even attract some people that have gone to your dark side in the digital asset space or the fintech world back into banking when banks, move forward with, how do we, as I said before, it's a clean slate of how we could build things or make things more operational, even make things more compliant, with the ability for screening, with ability for, tracking, with ability from a blockchain model. There are so many opportunities that come from this space that you're right, that the terms of barbarians and dark sides are long gone. We had the summer, and now we're all about, how do we build at scale? And it's still got its challenges. Market by market, things are different, regulations are different. There are locations that have different concerns. Even for us, in some cases, I'd love to do everything across our network. It's often now not a risk appetite perspective. It could be from a local regulation perspective, or just where we have that right product perspective to deliver what we do today, which is more on the fiat side. But yeah, watch this space. I don't want to say that we're too far ahead of any of the other of our competitors, because I think all of the industry is building and catching up. But I hope that we maintain a little bit of a head start with firms such as yourselves and develop the next phase together.
Yep, we definitely want to build this together with Standard Chartered. So thank you so much for joining me today, Luke. Looking forward to having more meeting and more session together.